Good morning and welcome to Almus Market Mornings, your daily dose of global financial updates with me, Swaraj. It's going to be an action-packed week with a flood of PMI numbers from various countries, FOMC rate decision, ECB rate decision, BOJ rate decision, and a lot more data being printed. Let's understand from JK the major themes that can catch on. Over to you, JK.
Good morning. So last week was a very dull week in terms of economic data. We had a few numbers to latch on to, but that also gave market some scope to consolidate the equities and the bonds. Of course, currencies also had good correction from the lows of the dollar that we hit, post US CPI numbers. Now the market is slowly setting itself up to face the central banks who are meeting on Wednesday, Thursday, and Friday, respectively, for Fed, ECB, and the BOJ. Yes, the PMI numbers would also be important. Of course, these are flash numbers for preliminary estimates, and they cover both the manufacturing and the services. While manufacturing continues to languish in almost all the major economies, services side is what the market would be looking at very closely. But more important would be the central bank meeting. Now the Fed, obviously 0.25 rate increase is well factored in, but interest is on what Powell would say, whether he throws some dovish twist to his language is what the market would be looking at in the context of the inflation that has fallen. Speaking of inflation, we also note that the rentals, which are a big influence on the inflation, has also actually started falling in the US, and it is not fully reflected in the inflation, so main inflation number, because it has a lag effect. So these are things that the Fed might be considering when they announce or when they give a forward guidance. On to the ECB, 0.25 again well factored in, but September is really an open question. Now, ECB is in a much more difficult position because while Fed has no concerns about growth, they would actually like the economy to slow down. In Europe, the situation is completely reversed. Inflation is still high, well above the policy rate, the real rates being negative, while the economy is showing distinct signs of weakness. And add to that strength of the currency, which also affects their exports, which further complicating the issue for the central bank. So I feel there will be a stance that would indicate September outcome on ECB meeting to be completely open, data dependent, and they would probably sound quite neutral on this regard. So it may not be so incentivizing the euro to rally further. We could see some technical move, and euro would take more clues from the Fed than from the ECB. On to the BOJ. Mixed reports. Initial reports indicated that BOJ could be tweaking this month. In fact, the official statements on the other side indicated that they may continue to stay with the policy this month as well. They have slightly higher projections for inflation this year, but for forward years like 24 and 25, inflation is seen to be much lower. And also they must be encouraged by the fact that inflation is falling across many economies, with the supply chain issues getting up addressed, and goods inflation actually coming down. So they may be hoping that inflation will not be an issue, and to spur growth, they would actually be looking at keeping the policy unchanged. So that's about the central bank meetings. But what may be more important for the markets would be the Chinese Politburo meeting that starts on Friday, and where there is expectation that the Chinese government will announce more measures for supporting the economy. They have announced, in bits and pieces, about 31 measures so far to support the economy, including the easing in the policy that they have made. But so far it has not really enthused the markets, and neither the Chinese stock market nor the Chinese yuan have responded as favorably as one would want to see, and that actually is a dampener, because if there is a further disappointment on the Politburo announcements this weekend, we could see more selling in the Chinese shares and also in the yuan. On to the currencies, which were the only main movers last week. We had a good correction in the euro, about 1.2%, and sterling had a much larger correction, obviously, because the inflation number in UK came much lower than expected. And Japanese yen surprisingly weakened more on the expectation that Japan will hold their rates without change, and Chinese yuan did react to some latest measures, but again seems to be very well supported at 7.17 kind of levels. And as I said, euro being the benchmark for the USD, or rather the leading currency for the dollar trend, seems like it is in a very interesting stage where the any dovish twist from ECB can push it lower further towards the 1.08 or so. Whereas if they remain hawkish, then retest of 1.12, and depending on overall USD trend and the Fed, we might actually push towards 1.15 in the coming months. But all said and done, we are in a very low volume period because of the vacation in the Western world, particularly in the US, and one of the lowest volumes was seen on Friday in the bond market, which normally has very good volumes. So expect more of range trading with a slight bias for the dollar to correct, and also one interesting point someone was pointing out about ECB was that looking at the economy, they might just follow the Fed footsteps by announcing a skip in September. It's too early to say, but that is something that we can keep in mind. And if there is any such announcement, then the euro can come under pressure. On the rupee, again, good flows have continued, and we have had almost 45,000 crores of inflows only in this month, and we still have another 5 days to go in this month. So we might well be the highest month in terms of inflows that is received. But thankfully for the exporters, RBI has been supporting, and the dollar index itself has been correcting higher. So there's no major sell-off in the USD INR, and any such sell-off has been absorbed by RBI. Should continue in view of the lining up of events in the coming days. It should continue in this range of 81.90 and 82.20 unless something drastic happens. Yeah, thank you, and have a good weekend.
Thank you, JK. And quickly, to summarize the eventful week which is coming ahead, we have got the FOMC, ECB, and BOJ rate decision on Wednesday, Thursday, and Friday, respectively. With Fed, a 25 basis hike is priced in, but of course, market would be keenly looking at what Powell is saying. With ECB, again, 25 basis hike is priced in, but they are in a slightly difficult position as inflation is still high in Europe. With BOJ, we are having mixed reports. Some say yield curve control could be tweaked, but as per official statements, they might maintain status quo. For INR, good flows continue. This month itself, we have had, as JK mentioned, 45,000 crores of inflows, but no major sell-off in USD INR. So we are still expecting somewhat of a range market. That's it from us today. Thanks for listening. Tune in tomorrow for another round of fresh updates. Thank you.